Hi, Dr. Webb. My name is Brad Summer, and this is a summary of my in-depth financial analysis of Sears and how they've struggled. So, if you would argue that the retail landscape in the United States has changed significantly, especially in the past 10 years, and there has not been a more public struggle to adjust to that landscape than that of Sears. To give you a little bit of background on the company, their CEO has been serving the position since 2013, Edward Lambert. He comes from a Wall Street background. He managed one of the most successful 20-year runs of a hedge fund in Wall Street history and brought a tremendous amount of investor confidence when he was named to the position. He purchased Kmart in 2006 and then utilized his hedge fund as well as a real estate company to merge Sears and Kmart together to create Sears Holdings, and has been doing that probably for the past 10 years or so. Is very quickly after he was named to the CEO position, he enacted a $5.8 billion stock buyback, and that eliminated a lot of capital for Sears to utilize in storefront improvements to customer experience, as well as major cuts to their advertising and marketing budget, which raised a lot of eyebrows when it happened initially, and that has only continued, and obviously it has not worked nearly as effectively as they thought it would. He wanted to create an asset lean company, but that has caused storefronts to suffer, as well as their stock price, which has fallen from about $133 in 2007 all the way to its current trading price as of last Friday, $3.87. So obviously a very significant drop, and you've seen a lot of investors run away from Sears, and many outlooks saying that Sears is probably going to go bankrupt here in the very near future. Another very public display of their struggle has been the amount of stores that they've closed. They've closed over 50% of their stores that they've had since 2010, from over 3,000 to just over 1,200 today, laying off hundreds of thousands of people. So very significant impact on local economies as well as within the Sears Holdings company itself. From a revenue perspective, they've gone from $51 billion all the way to their 2016 annual report of just over $22 billion. So again, a very steep drop, and another reason why investors have little to no confidence that this company is going to bounce back. As far as my own plan to make Sears more profitable, I would sell off many of their mall-based locations. I think that the mall business model is outdated. And one-stop shopping is becoming more and more irrelevant in today's world. Younger buyers want a smaller business feel. I would add more of their budget to marketing, advertising, and capital improvements, raising that capital by selling off a lot of these store brands. They've done it with Black & Decker already, selling off Craftsman to them. So I would continue that to raise capital, and then eliminate their online rewards program, shop their way. It's proven inefficient, and I think there's a better way to do that. My paper goes more in depth into my ideas to make Sears more profitable, and I look forward to seeing a review on it. Thank you.